Jay Pelosky, guest founder y principal de TPW Advisory. Jay, thank you so much for giving this interview to Negocios Televisión.
Thank you, Marta. Always happy to be with you.
As I just said, Biden picked Jerome Powell to lead the Federal Reserve for a second term. Does this decision open a continuity path?
Yes, I think it does. Obviously, Jerome Powell has been the Fed chair for some time. Lael Brainard is now going to be the vice chair. She's also been a part of the Fed for some time. And I think importantly, U.S. Treasury Secretary Janet Yellen, a former chair of the Fed, also endorsed Jerome Powell. So I think you have what is likely to be a pretty close relationship between the Treasury, the Fed, and the White House. And I think that was quite important for the White House to get that confidence. And that seems to be what has kind of taken a long time, right? Because if it was simply going to reappoint Jay Powell, what took so long? And I think what took so long was to really get a sense that there would be continuity, particularly around the issue of inflation, which I recall I spoke with you and your audience last week, talking about inflation and its transitory nature. This suggests to me that we're going to have a continuation of a Fed that is going to be slow to address inflation, and we'll want to see whether, in fact, it is transitory. And I believe it is transitory, and within a couple of months, certainly by a quarter or two, it will be clear that inflation will be trending down in the United States.
With the new Fed's vice president, what can we expect from her?
Well, I think she's very well respected in Washington and around the world. I think she brings an international aspect to the Fed that is welcome in this time as we go through various issues around COVID and climate, et cetera. Having someone at the Fed like Dr. Brainard, who is well known internationally, I think will be a positive. And also, she brings monetary policy knowledge that Jay Powell, even though he's the chair, he's not a trained economist. He's more of a banker. And so Dr. Brainard brings that intellectual heft to the table, which obviously is good for the Fed. And as you note, there are several other positions that are opening up, including the very important vice chair dealing with financial regulation. And I think we can expect a more hawkish person to take that position, given that President Biden did go against the progressive wing of the Democratic Party, particularly Senator Warren, who did not want Jay Powell to be reappointed. And so I think that financial regulator is likely to be someone who is quite conservative in terms of thinking about things like cryptocurrency and things of that nature.
How do you think the dynamic will be between Brainard and Powell?
Oh, I think it's going to be fine. They've already been working together for quite some time. There's nothing new there. Really, Dr. Brainard is elevated in terms of her position, but these are folks who have already worked well together, and I think that was probably an important consideration for the White House, given that there's so much uncertainty around how we come out of COVID, how we deal with this supply chain issues and transitory inflation. And I think that you can see that in the market reaction, maybe a little bit of market reaction in the short end of the rates, likely to suggest that in December, the Fed will accelerate its tapering process. It gave itself that option last month. I think given the concern about inflation, it will take that option, and we will hear in a couple of weeks that the Fed is going to accelerate its tapering. And I think that's not a bad approach, because it then gives more time towards the middle of the year when tapering is finished for the Fed to decide whether to raise rates.
Mm-hmm. Do you think Biden is preparing her to be the next Fed's chair?
Well, I think that's a good question, and kind of, thinking fairly far down the road, Martha. But should President Biden be reelected, because it would require his reelection, right? Because it's a 4-year term. Should he be reelected, it would be quite likely that Dr. Brainard would be certainly a strong candidate. Whether or not she would become the chair would remain to be seen. There is an element of bipartisanness within the Fed chair. Typically, the Fed chair is of the other party from the president, and that is the case here because Powell is a Republican. So that continuity is continued, and so it'll be interesting to see should President Biden, for example, not be reelected when he runs in a couple of years. Would the Republican president, whoever he or she may be, would they appoint a Democrat? I mean, that'll be something that we can worry about a few years down the road.
Certainly, inflation will be one topic on the table for the next chairman in the Federal Reserve, for Jerome Powell. Do you think inflation will be temporary?
Yes, I do. I think that the supply chain issues are already becoming less worrisome. The ports on the west coast of the United States have already sharply reduced the amount of containers that are waiting to be unloaded. The shipping rates from Asia to the U.S. are down 30% or so. You've already seen oil off 4 weeks in a row, natural gas prices down. So, yes, I think a lot of the issues of the last couple months have been seasonal. The trade push to get goods to the United States for Christmas, that's passed. The energy concerns are related to winter, and then that will be done in a couple of months. So I think really the issue is the Fed probably accelerates the taper, the end of tapering in March or April as opposed to June and July. They give themselves a couple of months to see how the market is responding, what inflation numbers look like, and there will be some fall off as we go through the first half of next year. The year-over-year comparisons will get a little bit better, and I think it is quite likely that inflation won't come back to the 2% level, but probably more like 3%. And I'm a firm believer that in the United States, if we can have a period of time where we have growth of 3 to 4% and inflation of 3%, that would be a very, very good outcome. Right now, markets are pricing in a more aggressive Fed at the beginning of the cycle, i.e. next year, and less aggressive towards the end. So right now, if you look at the 5-year futures, for example, for break-evens, the interest rate market is saying that we're going to go back into kind of the same growth path we had after the great financial crisis. 2 to 3% growth, 1 to 2% inflation. I think there's a possibility that we get 3 to 4% growth and 2 to 3% inflation. And that would be very, I believe, constructive for risk assets. But that's not what the market is pricing right now. And that's really the debate I think we're going to have as we move through 2022.
Last question. Which are your expectations for next monetary policy meetings for the Federal Reserve and for the European Central Bank?
Well, I think that, again, very good question, because we've seen that that gap open up, right? It's clear the ECB is not going to move anywhere near as quickly as the Fed. The idea that the ECB will raise rates next year, as has been kind of kicked around by market participants, I think is highly unlikely. The likelihood of the Fed raising rates next year has become much greater. And that divergence has led to the dollar strengthening versus the euro, right? So now the euro is 112, 113 versus the dollar. At the beginning of the year, it was in the 120s. So that should help Europe in terms of its exporting, particularly to China, because the renminbi is tied very closely to the dollar. It's actually the only major currency to appreciate versus the dollar, has been the Chinese renminbi, up about 2%. So that should really, that weakness of the euro should help European exports, should help the European growth picture next year. But I don't expect much at all from the ECB in the next several meetings. And I think in the case of the Fed, as we touched on, I believe next month in December, the Fed will announce that it is accelerating its tapering process to address the market concerns around inflation. and that's fine. It doesn't really do anything to the rate structure. It simply shows the market that the Fed is paying attention and understands the market's concerns, and I think that should be sufficient to to calm some of those concerns. And then, as I said, really, as we go into the middle of next year, the question is going to be, has inflation moderated? I think it will show that inflation is moderated. And then the bigger question really is, from 2022 to 2025, what does the path look like? As we just touched on, I believe there's a chance that we have a productivity boom, a CapEx boom in the United States that puts us onto our higher growth path. And the price of that is going to be slightly more inflation, which I think is a trade we should be quite happy about. 3 to 4% growth, 2 to 3% inflation is way better than 1 to 2% growth and 1% inflation.
We'll see, Jay, what Jerome Powell has to say in the next Fed meeting in December. Jay Pelosky, founder and principal at TPW Advisory, thank you so much.
Thank you, Marta.